Gas has topped $7 per gallon in parts of California as the Mirror says it's the Iran war that's driving the prices higher. You're listening to Michael Patrick Shiels, radio stations across the state of Michigan. And we're getting into the travel season. A lot of people will travel for Memorial Day. They'll get in the car. They'll want to go somewhere. Gas prices are up. The U.S. stock market has rallied to new highs, and the Financial Post is reporting that it's been propelled by so few stocks that it's reminding Wall Street of the run-up to the dot-com bubble. To translate that, Dewey Steffen, the CEO and Chief Investment Officer at Great Lakes Wealth, the Michigan-based company, is on our AT&T line right now with reaction. 4 of the last 5 closing records for the S&P 500 index incurred even as the decliners outnumbered the gainers. I have fuzzy math, as you know. Can you give us some perspective?
Well, hello, Michael Patrick, and good morning. And,
Thank you.
Yeah, the perspective is really a lot of old Wall Street adages. In this case, it's called the Wall Street is climbing the wall of worry. The stock market is climbing the wall of worry, which means there are some positive data points, positive economic or company indicators that are climbing those stocks, and it's on the back of all of the headlines. So the wall of worry, but the economic positivity of those stocks in particular are climbing, and so it's confusing or it's a conundrum.
Are you worried, or are your clients worried? There's a guy called Gary Schilling who is a legendary forecaster, and he was with Merrill Lynch and predicted recessions in the past. He says that a U.S. recession is almost inevitable, and it's driven by a frozen housing market, corporate investment indicators, and a weakening consumer base.
Well, MPS, you've been doing your homework, my friend, and I appreciate that. And, yes, I think we can all agree, and I would say you would as well, that there probably is a recession coming at some time. We've been saying here at Great Lakes Wealth for several years now that this is the most foretold recession that hasn't come yet. We've been talking about a recession for the last 3 years, and certainly oil issues, global calamities and situations. If we don't see a recession, we are seeing a slowdown for sure. But recessions happen. So, again, that article and those data points, really not too much of a surprise there.
Are stocks expensive right now?
And that is also the case. So, yes, I think most Wall Street prognosticators would say that many stocks are expensive right now. And so, again, there's right reasons why they can continue to appreciate, but certainly by many, many indicators, not all stocks, certainly not all sectors, but many are, valued at high ends or maybe even overvalued, absolutely.
Americans living with higher prices right now. I mean, we're not starving. We have plenty of beef and wheat and eggs. They just cost more. And that is, something that will eventually trickle down to all of us. What advice would you have to somebody who is one of your clients right now, as I am, in fact?
Well, Michael Patrick, again, there's a lot to unpack there just because every individual or every family or every corporate situation is different. And so you need to take a look at your own particular situation and talk to your financial professional, and MPS, as you said, give us a call and we'll chat. But always be proactive, be thinking ahead. But in this situation, make sure that you are rebalancing. About just 6 weeks ago, the markets were down, let's say 10%. Now the S&P is up, let's say 5%. So again, just know where you want to be in the fall. You can rebalance. And also, in a situation like this, having extra cash on hand. We've said rather than 3 to 6 months of cash on hand for those emergencies, and you don't want to have to sell your stocks or sell things when they're down, maybe go to 6 months to a year of cash on hand, and you can get very good rates still in high-yield savings accounts or money markets.
What kind of rates can you get?
Well, right now in money markets, you can get anywhere between 3.5% and 4% if you know where to go, like maybe to here at Great Lakes Wealth. Give us a call. But in addition to that, with what's happening with the oil price and the shock to the system, the Federal Reserve has said they are on pause for lowering rates, and they, in fact, may have to raise rates later. That's a whole nother conversation. But in that scenario, if they raise rates, your money market rates and those floating rates may float higher. So, again, there's a reason why you don't have to panic to get out of your cash. And, again, be safe, be responsible, and talk to your financial professional.
Dewey, Steffen, the CEO and Chief Investment Officer at Great Lakes Wealth, your company's coming up on an anniversary.
Well, thank you for mentioning that, Michael Patrick. Please feel free to go to our social media, and we'll be dropping an invitation actually later today to the entire community that we are in, which is the entire United States, frankly. And so with that, June 19th, we're celebrating down at the Detroit Athletic Club. We're going to be doing a fundraiser for charity and celebrating the 10 years of partnership with our clients and the community, and our actual 10-year anniversary is on July 1st. And so, yes, it's a summer of celebration, summer of just community and of charitable giving.
Thank you very much, Dewey, Steffen, and congratulations at Great Lakes Wealth. You have wealth.